All right, just a couple weeks away from Thanksgiving. Thanks for dropping in to watch this month. I did not get to create a newsletter last month, so a lot of data and whatnot that we'll get caught up on. We'll start right out the gate with our median home price according to that Beacon report. Just came out last week. It surged back up 778,000 compared to 713,000 in September. As always, take this information with a grain of salt. It is the median, and as we always disclose, a few high sales or a few low sales can really dramatically change that number. All right, so how about number of sales? So far this year, we're actually doing a little bit better. Sales are up about 10% so far this year compared to the same time last year. 162 for the month of October. We had a really good June, July, and August, and even into September when you compare that to last year. So this same time last year, about 1,326 sales. So far this year, 1,462 according to this chart. So even though we're experiencing a healthy number of sales, the market is certainly moving slower. In the last few months, the days on market has really climbed. Here you see the median days on market up to 66. It's been a really steady increase this fall, higher than what we've seen in past years. And in just a moment, I'm going to show you some MLS data that will reflect that average days on market. So homes are selling, just be it they're taking a little bit longer. But we're also moving into that time of year. I've been saying that the last couple of months here is fall and winter. We see homes come off the market, inventory levels come down. So our months of supply is down to 3.5. We peaked up at 5 this summer, 5 months of supply, which was the most we'd had in a long time. But this is totally normal. It's seasonal to see the number of listings come down. Again, you'll see some MLS data here in a minute. We'll compare to last year where we were at. All right, real quick for my Redmond peeps, we're going to run through that same data according to the Beacon report, starting with that median home price. Yours went down a little bit to 515,000. Sort of vacillated there. You saw a pretty good surge there in January, but 515,000 is now the median sales price in Redmond. Surprisingly, Redmond's number of sales is actually going the other direction. It's down about 11% compared to the same time last year. 51 sales in October. Compared to 64 October last year. They had a really healthy July last summer as well, contributing to 88 sales there. Okay, another piece of Redmond data that's sort of the opposite of what Redmond is doing is the median days on market dropped to 24. So a little surge there, a little pickup in the market. Did this about the same time last year to October, November. Days on market dropped a little bit before it climbed back up for winter. I would suspect that same pattern will repeat, but we'll keep an eye and see what happens. All right, now we'll look at some MLS data and how those average numbers look. Here's a chart. I've showed you this before in the past. I run these numbers every Friday. Don't get too caught up in the average prices here. As we've discussed, those can dramatically change week to week, month to month, just depending on if some higher end homes have sold or a bundle of cheaper homes have sold. So don't get too caught up in those numbers. You can see that the active listings is higher compared to this time last year. The number of solds is quite a little bit higher as well. Remember, this is the last 30 days, single family homes under an acre in Bend. DOM stands for days on market. And as I was mentioning earlier, look at the number of days and how much it's gone up in every category, active, pendings, and sold. So these homes are just taking longer to sell. Buyers are taking their time, which sort of transitions into this last piece of data you see off there to the right is the sold versus original. So that's the original price that they came on the market as compared to the final sold price that buyer and seller agreed to and it recorded at. 92.7 compared to 94.87 last year. So it really paints the picture. It shows that homes are selling, we're up 10%, but it's taking a lot longer. The days on market is excessively higher, and you are seeing a lot of price reductions. A lot of these sellers are starting at prices that probably weren't realistic, or maybe they were looking back a couple years or hopeful, and then ultimately making price reductions in order to get those homes sold. So that'll segue to this last chart that I want to show you, MLS data. This is actually sold properties through today, which is November 12th that I'm filming this. Just to kind of give you an idea of where the number of sales are happening, what price points, what categories. I had last run this back in September, so I just updated this today. Thought it'd be a good chart to share with you. All right, just a couple more charts to cover regarding mortgage rates. So current 30-year fixed rate mortgage is about 6.2%, 15-year fixed rate mortgage is about 5.5. It has been stuck here for a little bit. It's better than it was a year ago, but we're still seeing sort of a flat line of rates here. It's hard to tell when these might go below 6%. I know there's a lot of people hoping, there's a lot of optimism, but now we've had 2 Fed rate cuts this year and we're still stuck above 6. This will lead us into a conversation. I'm sure you've seen this in the news now, or you've talked about this with somebody, floating the idea of a 50-year mortgage. Here's a chart that's from Fannie Mae, which there's lots of charts online and different ways to explain this. But this is an example of a 15, 30-year, and a 50-year mortgage, assuming the home price was $300,000, 5% down, 5% interest rate. The bottom line is, yes, a 50-year mortgage will improve your monthly payment because obviously they're just amortizing it out. That's stretching your payments out over 50 years. So it will drop your payment, maybe a couple $100. But overall, the amount of interest that you're going to pay is significantly more. All right, so it will be interesting to see if this 50-year mortgage actually comes to fruition. And if it does, how it affects the market and who utilizes it. My guess is there will be a fair amount of people that do actually use this. We do live in a country where people are paycheck to paycheck, month to month, week to week. So even a couple $100, few $100 per month can make a big impact for them. And maybe that's the difference between affording a home or not. But there are some unintended consequences with the 50-year mortgage. In particular, what I had just showed you, the higher interest overall on that loan. But again, people buy the monthly payment. They don't buy the overall price tag or get caught up in that. All right, that's all I have for you this month. Thank you as always for watching. Have a great Thanksgiving this month. Enjoy your time with family and friends, and I'll check in with you in December.